This is the strategy that I've actually been using to grow all the small accounts, and this is basically what has actually been able to push me up to this level. What's up guys, welcome back to my YouTube channel. It's your boy Vidollar back. In today's video I'm going to show you my trading strategy. This is the strategy that I have been using for all these years, and it has actually gotten me profitable. Now you guys can have a look at this screen recording. You can see that these are results on a small account. So I'm going to dive straight into the charts, show you exactly how this goes. It's literally broken into 4 segments, so I'm going to break these down for you to really understand how this works. So without any games, I'm going to dive straight into it. Alright, so we are straight into the charts. Now I really want to emphasize one important thing. Trading is all about simplicity. The more you try to make it harder in your mind, the more these charts actually seem harder. Remember, these are just charts. It's just data that is actually displayed to you for you to be able to make money, right? Now let's check this out. So I'm currently on gold, and just to have a quick look here, you can see that I've actually gotten a trade already. I'm on a sale and I'm literally making money off this already. So let's see how you can actually use the same trading strategy. Now I have 4 things. Like I said, we have 4 segments that we have to always look and emphasize on. You're going to start maybe from bigger time frames, doing all your breakdowns, but at the end of it all, you have to get when to get your entry, because at the end of the day, you're not going to just bump into the markets and boom, that you've gotten an entry. Whether you're a swing trader who actually holds trades for days, for weeks, you still have to get a very good entry point. Okay, so that's all inclusive in here. Okay, so let's see how this is actually done. So first things first, we should always start from bigger time frames. It's really so important, because on bigger time frames you get that bigger picture. Okay, so let's go ahead and try out on gold. We can actually try a different pair, because I'd actually analyzed gold already. So I could go ahead, maybe analyze this pair first, and then we shall try another pair again. So there we go. So we are going to start away from a bigger time frame. You can either decide to do the 4-hour or the daily, but most times I do prefer the daily, because on the daily you could do this once. You could draw your key levels, and then it's done for a week, for 2 weeks, because it's a bigger time frame. So you can see that I'd actually drawn these levels already, so you guys can see that I have these horizontal lines. Now you can do this on your trading platform, on the phone, or on the laptop, anything. Just go ahead and select the object as a horizontal line, boom, drag it down, just to have at least 3 touches. Let me go ahead and illustrate this clearly. So you can see that I was actually considering 1, 2, then I had 3, then I had 4, right? And then on the other side up, I also drew these ones here. Let me get this off. So you can see that also on the other side up, I have this right here. So let me go ahead and adjust it clearly. So if I pushed it up to here, so I would have so I'll basically have 1 touch, 2 touch, 3, 4, right? Easy stuff. No complicating things here. Again, I would go ahead and draw one more. Let's say just around here. So I would have my touch here. If I can actually zoom in a little bit. So I would have 1, 2, 3, basically 4, multiple. So as long as you have 3 touches, you are basically good to go, right? Easy stuff. Now you can also use trend lines. Trend lines, horizontal lines, all those are basically used to mark out key levels. Key levels are levels where the market could actually bounce or find support or resistance, basically being respected multiple times. So those are really so important, because it shows you what could actually happen in the near future. So you could still go ahead and use trend lines. Now a clear example here is, let's try to compare the previous market data here. So I'll go ahead and maybe draw a trend line here, and then also stretch one around here, So I have at least I have to have 3 touches. So let's say if I adjusted this here and then extended it up right around here, there we go. So you can see that we have 1, 2, 3. Now you can see that every time the market hits the trend line, bounces off. It's a trend line, hits the trend line, bounces off. Easy stuff, right? Easy to understand, no complication here. You know what I mean? Like either way on the other trend line, boom, hit the trend line, bounce down, hit the trend line, bounce down. So easy to understand, right? And then whenever you have two trend lines, that's a channel. So meaning now it shows that okay, you now have two levels where the market is basically playing all around. Now looking at the current analysis that I'd actually made and how I just got this trade right here, so I'm going to go ahead and scale down. Now at some point after getting these levels, now it's time for us to start scaling down to smaller time frames. So you can see initially I was on the daily. I just used the daily to draw those horizontal levels. The horizontal levels, remember, maybe a quick one, those ones who do not know about support and resistance, like I said, let me go back to the daily. So briefly, if you don't know about support and resistance, so we have this line here, this horizontal line here. You can see when the market reaches here, it gets supported to push back up, reaches here, gets supported to push back up. Now either way on the other side on top, when it reaches here, it finds resistance and it comes down, right? If we could actually stretch through and have a other touch, you know, basically reaches here, reaches this point and then is resisted to come down. So a quick one maybe on how you can actually get this is you just have to have a live example of, let's say you have a ball and you're bouncing it between a room with the floor and the ceiling. Basically when it reaches the floor, it gains the support to hit the roof, and then when it hits the roof, it's resisted to come back down. Easy stuff, right? So that's a clear example of support and resistance. So let's go ahead and slide down to smaller time frames. So it's all about you keep scaling down. Scale down. The more you scale down, the more you get closer to the entry points. Okay? All right. So we are now on the 4 hours. Now this is what I actually did. So on the 4 hours, I actually had to draw these two trend lines. Now you might ask, how do you even draw these trend lines? So let me go ahead and delete this so we can try it again. Okay, remember I said we just have to have at least 3 touches. Okay, you can also have 2, anticipating the third one, it's also okay, but 3 better. So you guys can see that I actually had this one around here. So I would have to go ahead and just drag it a little bit so I have my touches clearly. Boom. There we go. So basically you can see that I'm actually considering 1, this wasn't accurate because we didn't touch the trend line. 2, 3, 4, right? You can see that we are hitting the trend line and bouncing off, hitting the trend line, bouncing off, right? Awesome. So let's go ahead and draw one more on the upper side because it's also clear, we can easily see it here. So we can go ahead and draw this right here. This is what I'd actually drawn initially. So you can see that trying to adjust it this way. So in this particular case, I have 1, so I basically have 1, 2, and then we have the third one here. Now I'm going to go ahead and just zoom in a little bit so you guys can really see what I'm actually talking about. Even if it's a wick touching those key levels, you have to count that as a level, okay? Because the wick means it was initially a candlestick that actually pushed to that level, and then it's either buyers or sellers who came in, and then maybe they took over control. So at the end, a long wick formed. So you also have to consider the wicks. So like in this example, you can see we are basically looking at this, and then this, and then we have this currently, right? Awesome. Now let's go ahead and then really see. So you can see that we are currently on the 4 hours. So we can go ahead and scale down to 1 hour. You know, the better, the lower the time frame, the clearer it gets. Now check this out. So you can see that this is the level that we had marked out, right? You can see that this is the level on the trend line where we were bouncing off, right? Let me go ahead and stress it up clearly. Right, this is the level because on the 4 hours we saw that we were bouncing off that trend line. Now you can see that we have some big bearish candlesticks forming. Now how do you understand? It's easy, just look at the candlestick. If it's bigger, it means as considering the colors of my candlesticks, The red ones represent the sellers, and then the blue ones represent the buyers. So a clear example is here. So you can see if the candlestick is bigger, let's say a blue one, just like in this example here, it means buyers were in total control, right? Either way, if you see the red candlestick is bigger, it means sellers were in total control, right? Now, you could see some candlestick patterns. Let's say an engulfing candlestick. Let's say initially it was a bullish candlestick pushing to the upside, and then we saw a big red candlestick forming. It means if it actually closes above and then below, it means it has basically engulfed the previous candlestick. So we call it an engulfing candlestick. That's some easy stuff. You just look at the charts and you're there. So going back to what we were actually looking at, so you can see that this is the level on our trend line. You guys can now really have a clear look here. Check this out. Now, if you're actually watching the video up to this point, consider smashing the like button. You can also join our main Telegram channel, to be part of this community. The link is in the description below, straight up. So have a look here. So this is the point that we had actually marked out. Now you can see that I also had to mark out this point here. So I just had to draw this this shape here, just trying to mark out this level, because you can see that initially we pushed down up to here, and then we got some support. Okay, we got some support to push to the upside. So meaning this was also a key level in this particular channel, right? Straight up. Now actually, after finding out that okay, we are now bouncing off a key level, if it's a trend line or a horizontal line, or either your support or resistance levels, now it's time to get entries. Now this is the most tricky part. Most people actually don't know how to get entries. The worst thing is, if your entries are incorrect, you are going to fight with drawdowns. You open up a position and you have to actually struggle with drawdowns until it comes back to you until it comes back to your directions. Sometimes your account could even get blown up just because of a minor drawdown, and at the end of the day, it doesn't make sense. So it's really so important to get the best entry point. Okay, all right, cool. Now let's check it out. So we are going to go down to the M15. Now, to me personally, in this strategy, I always get entries on the M15. So how do I do that? Now we need to find pullbacks. So what are pullbacks in the first place? So we are going to first illustrate clearly here, and then we shall see. So you guys know that let's say in an uptrend, we are pushing up, coming down for pullback, right? Pushing up, coming back for pullback, pushing up, coming back for pullback. Now I'm going to label them P, okay? So this is P. Can also label this P. We can also level this P, okay? So you can see basically we come pushing up to the upside, come back for a pullback. So this push down is a pullback. Push to the upside, come back for a pullback, push to the upside, come back for a pullback. Now, here's where we get our entries at these points here, okay? Please look at this clearly. This is where we have the entries. Now, first things first, you may ask, okay, why positions are the pullbacks only? Now, have a look. First things first, we are not going to find drawdowns. Why? Because this is a key level. It's a support level. We expect the price to push up immediately. Then, on the other hand, we are going to have a good stop loss, with just a few pips, basically having a great risk to reward ratio. Now an example is here. So let's say we took a buy at this point, so we could enter buy here, and let's say we have 1 to 2 risk to reward ratio, extend it, let's around there, and then we just have to extend the stop loss just below the pullback. Why? Because it's a key level. If it's broken, it's okay. It means it's no longer valid. So it means you would have gotten stopped out. But the good thing is these are key levels. They have been tested multiple times. So it means it's okay. If you get your stop loss at that point, it's okay. You're safe. You know what I mean? Like if you get stopped out, it means the markets could either be reversing literally, cause these are key levels. You can see this point also. If we decided to get a buy around here, we would get a buy here. Actually, this is the easiest way to kill this, right? We could get a buy here and then extend the stop loss just a few pips below the pullback, right? And then look at your risk to reward ratio, let's say 1 to 2 or whatever. Okay, now let's see this in the live charts, because this was just an illustration. So let's go ahead and stretch back to the M15. That's what we are on. So an example is here. So if we were taking buys right in here, of course, we would look at a buy around this level, because you can see that a quick one here. So you can see that we pushed up, came back for a pullback, pushed up, came back for a pullback, right? You can see this level here. So we came back for a pullback and pushed up, right? We came back for a pullback. So on pushing up, we expected this to break the previous level, right? This is a bit so dirty. So we basically expected these to push and then break the previous level, but that didn't happen. So we can also consider that. So going back here, so you can see that we push up. You can see that we push up, come back for a pullback, right? Now these are the points that I'm trying to emphasize. This is where we get positions. This is where we get positions. You can see you're going to get your position in here. Oh, sorry. You can see we're going to get our position here. Just place your stop loss way just a few pips from that, from where the pullback closed, or from around here. Then stretch your stop loss to about 15 to 20 pips, whatever. And then you take profit to about 1 to 2, right? And trust me, are you going to fail to kill this? You know what I mean? Like, check this out too. You know also that we also had this point here. Just get your entry at the pullback. There we go. And then place your stop loss basically below the pullback and you're good to go. You know, easy stuff. Maybe to do a quick recap of what we just discussed, this is how basically this strategy works. So we just have to start from bigger time frames, get those key levels, whether they we can decide to use trend lines or horizontal lines, basically trying to mark out those levels where the market is basically playing around. Remember, that is done on bigger time frames to really have that bigger picture, right? And then we just have now to start scaling down. Now, maybe one thing that I didn't emphasize, but this actually underlies in the key levels, right? We just have to go with the trend. Don't take buys when the overall trend is to the downside. Either way, don't take sells when the overall trend is to the upside. Alright, so I hope you guys really found this video helpful. Please consider smashing the like button, subscribe to join this community, and I will see you out.